protection gap in life insurance? The answer is the life insurance protection gap is the large difference between the financial security families need if a breadwinner dies and the actual life insurance coverage they have. That means you can say it is the resource needed minus resource available. So it is calculated as I said, resource needed minus the resource available, highlighting a significant under insurance problem globally, especially in developing nations where people lack sufficient funds for dependents, living expenses, educations, and debts, despite rising awarenesses. Okay, key aspects of the protection gap. Like key aspects like definition. What should be the definition? The shortfall in the insurance coverage required to cover future financial obligations like income replacement, educations, mortgages versus what actually insured. It can be calculated like what I said, resource needed. What resource needed? Like future expenses, debts, minus resource available. Available means current savings, existing insurance is equal to protection gap. That means protection gap is actually the difference, means the gap between the resource needed and the resource available. And as you can say, scale, it can be very massive. Some reports show India facing an 83 to 92% gap, protection gap. That means families have only 8 to 17% of the needed coverage, and a massive population doesn't have actual insurance. So this is the protection gap. And what are the causes? This is like a lack of awareness, complex jargons, difficulty in assessing need, and affordability issues. So what are the impacts? Impacts significant financial instability for families, increased reliance on government aid, and greater economic burdens when the tragedies occur. Then how to address it means how to overcome it. Like first, financial planning. Create proper financial planning. Use calculator to determine actual needs for dependents. Then second point, you can say increase coverage. Purchase adequate term life insurance for income replacement. Third is save and invest. Build separate savings for long-term goals like retirement or educations. In this, you can say types of gap. Here we came to know about two types of gaps. Basically, risk protection gap. This is difference between total economic losses and insured losses. Broader include disaster also. Second comes insurance protection gap. That is insufficient insurance purchased versus what economical optimal. Focuses on individual or households. This is all about protection gap. So here we can say we should maximize the insurance coverage to meet the protection gap, and it is very important because the gap is very huge, and for companies like foreign as we know, foreign direct in FDIs is coming to 100%. So foreign investors are more willing to invest in our country because this gap is very huge and they have a great and massive market for that. So we'll try for minimize the gap. Thank you.